Welcome to The Explainer. Today we are diving deep into the rumors that are just blowing up the internet right now, all about the silver market. We're talking claims of a massive default, empty vaults, a market about to completely break. So we're going to look at the actual published data and find out what's really going on.
You've seen them, right? The headlines, the frantic online posts. The story is that a crisis isn't just coming, it's right around the corner. But you know, sensational headlines, they have a habit of leaving out the most important details. So, let's cut through that hysteria and look at the real numbers. And this, right here, this is the core of what we're doing today. It's so easy to get swept up in a story that just confirms our biggest fears, especially when the markets get this volatile. Our goal is to anchor ourselves in the facts, using the COMEX's own data to see the real picture.
So, what is the central claim? What's the big, scary story? Well, it's that the COMEX, that's the main futures market in the US, is just about to run out of physical silver to back its contracts. And if that were to actually happen, whoa, it would be a market-breaking event, a true default.
So these are the serious allegations you're seeing online. They paint a picture of an immediate, system-wide crisis. Now, to get a clear picture of what's happening in silver, we're actually going to do something that might seem a little weird at first. We're going to start by looking at gold.
So why on earth are we looking at gold? Well, because these markets, they're deeply connected. A sudden crazy collapse in silver while gold is just humming along perfectly fine, that would be really unusual. So think of this as a quick health check on the whole precious metals market.
Okay, so check out the physical delivery numbers for gold. We can see that December, with just over 29,000 contracts, was a pretty strong month. But it wasn't a record-breaking panic, not even close. In fact, if you look at the chart, December was actually way lower than the highs we saw back in October and August. This looks like a normal, healthy market, not one that's under stress.
And what about inventory? The total amount of physical gold sitting in COMEX-approved vaults? Well, it's about 35 million ounces, and that number's been incredibly stable for the last couple of years. This does not look like a run on the bank for gold.
Now, if we break that down, you can see 19 million of those ounces are in what's called the registered category. That just means it's available right now for immediate delivery. That shows a really liquid market. So, the verdict on gold? The data says it's not showing any signs of an imminent failure.
All right, so gold seems fine. Let's move over to silver now, because this is where the story gets explosive, and you can see exactly where that default narrative is getting all its energy.
I mean, you can see why people are getting worried. A massive run-up like this, going from around $30 to over $60 an ounce in just a few months, well, that's a huge reason why all this speculation about a physical shortage has gotten so intense. When a price moves that violently, it's only natural for people to start wondering if the underlying supply is breaking down.
Okay, so now let's get to the crucial data for silver. This is where we really put the rumors to the test. And hey, if you're finding this analysis valuable, please take a quick second to like this and subscribe so you don't miss any of our future explainers. All right, let's see what the numbers have to say.
All right, this is it. This is where we tackle the main claim head-on. Is the COMEX truly running out of physical silver? Are the vaults actually being emptied out as we speak?
First, let's just look at the total inventory. The COMEX system holds nearly 500 million ounces of silver. Just hearing that number alone should make us pause before we believe that the vaults are empty. But you know what? The details matter even more.
Now, what's really interesting here is how that big pile of silver is categorized. It is absolutely crucial to understand the difference between registered and eligible silver, because this little distinction is where so much of the confusion and, frankly, misinformation online comes from. So while it's true that only the registered part, that 28%, is available for immediate delivery, that still comes out to 129 million ounces. That is hardly an empty vault. That number just does not support the alarmist story of an immediate, imminent default.
Now, what about that other big rumor? The one about a key player, JPMorgan, packing its bags and leaving? Well, the data shows the complete opposite. They are one of the single largest holders of physical silver within the whole COMEX system. They haven't abandoned the market. They are a central part of it.
So here's the crucial point. While the specific rumor of a COMEX default today is just wrong, the underlying anxiety that people are feeling, that's not coming from nowhere.
The source argues that the Federal Reserve is already monetizing the national debt and has been easing interest rates. Now, those are moves that are usually saved for deep, dark recessions, but they're happening right now. The source believes this is the final phase for our current currency system, and that it's setting the stage for a potential crisis just down the road, not tomorrow.
And this is the most important thing to take away from all of this. The panic over an immediate silver default, it might be premature, but the underlying concerns about the economy, those are valid. The critical difference here is the timeline. The fact that there's no crisis today doesn't mean a crisis isn't coming. It just means there's still time to understand and prepare.
So, what's the key lesson in all this? It's really about becoming a smarter, more critical consumer of financial news. It's about asking, okay, but where's the data? And learning to tell the difference between short-term market noise and a real long-term structural shift.
And that leaves us with a final thought. Instead of panicking over rumors of a COMEX default, the real work is in understanding the bigger economic forces at play. Things like Federal Reserve policy and government debt. Those are the trends that will truly shape our future. Thanks for watching The Explainer.